the current debt crisis that we are undergoing right now, I think the roots of that crisis is somewhat not related to the multilaterals, but rather to the fact that Sri Lanka, after the end of a costly 30-year war, over the last decade, decided that they would borrow heavily from capital markets by issuing sovereign bonds, and of course, also borrowing from new lenders like China. Because after a long drawn conflict, the country's fiscal situation was rather weak. We didn't have domestic resources for a major sort of public investment push. Now, Sri Lanka is not unique in having looked at these options after the financial crisis. Interest rates were low globally, and investors were also looking to emerging markets, particularly in Asia. Now, there have been policy missteps, I think, in how we managed those funds in terms of, institution and governance framework on debt management. A large chunk of that went into public investment. But the nature of those kinds of funds from capital markets from China is that, many of the hard questions that the World Bank, for instance, may ask about the feasibility of these projects and their economic viability, and how whether these are priority projects for the long-term development. Those kinds of questions don't tend to get raised, and governments pretty much have a free hand in picking and choosing what where to sort of plug this money into mega infrastructure projects. So our experience has been that we've used those foreign borrowings for large infrastructure projects. Some of it has been relatively okay. Some projects are questionable. We used some of those borrowings for consumption, and without paying much heed to how we would repay those loans. In a sense, depending on continuing access to capital markets to refinance our debt. And when a shock hits like COVID-19, and you suddenly find that your macro fundamentals are under scrutiny, your sovereign credit ratings plummet, and you are frozen out of capital markets, then you come to the kind of situation that we have come to, where we've technically defaulted on our debt. So it has little to do with IMF programs or the World Bank funding, etc. But of course, when we come to the restructuring and getting ourselves out of this, then clearly whether the kinds of tight IMF fiscal monetary exchange rate conditions that come, those will mean that growth suffers. It will take us about 3-4 years to really pull out of this, and in that time, balancing social unrest, because the man or woman on the streets is being hit very hard. That's a major challenge. So those are some of the initial thoughts I have on big sort of ticket financing that we've undergone here in Sri Lanka, and the problems that we've encountered as a result of not managing those funds in a sensible way.